And we're definitely not North Dakota, Mr. Speaker.
Are you in support?
With reservations, but I am in support of a task force.
Thank you.
I think it's important to study things when we are going to enact legislation that is so drastic like this. I think we need to prepare ourselves for the possibility that perhaps this is not something that we're qualified to do. And something so serious as a state bank has multiple ramifications. Would it hurt our current banking industry? Would it hurt our consumers? Would it hurt our overall ability as a community to be able to give loans? So I'm in strong support, well, actually support with reservations of this task force, and I hope that we tread lightly in actually establishing a bank before this is implemented.
Okay, thank you very much. Okay, we have one more measure on this page. Okay, let's proceed on to Standing Committee Report number 924-12, House Bill number 2103, House Draft 2, Representative Ward.
Chair, I yield to the Chair of Finance if he would like to.
The floor is yours, Representative
If
Ward.
not, I will proceed. Mr. Speaker, I stand in opposition clearly as those who just voted in with at least a few words to say that we've got to study it before we do it. Let's look at this bank, that bank, and the other bank. If that's the case, this thing should be dead already, because this says it's going to be established. This is the Bank of the State Bank. This is the Bank of Abercrombie. Let me give you 7 reasons why this is bad policy, bad idea, and bad for the people of the state of Hawaii. First of all, and this is what my initial speech was, we've been there, done that, vis-a-vis the study about the Boston Reserve Bank, about what Massachusetts found as they looked at the Bank of North Dakota. That is something that we should learn. If those who don't remember their past, they're destined to repeat it, and I think we're going to head into that same thing. Our homework has already been done. We can learn from it. We can save money from it. So reinventing the wheel, as I spoke of earlier, is number 1. Number 2 is that this is really a risky proposition, Speaker. This is not a FDIC, Federal Deposit Insurance Corporation, fallback. It falls back on the taxpayers. And as the Bankers Association said, there's a difference between a bank which loans money and investments which you risk and try to get it in a return. And this bank that's going to buy toxic mortgages, probably the worst asset, the riskiest asset there is going to make money. So the risks are extreme, the risks are serious, the risks are all over. It's got flashing red lights all over it. Another reason why this is a bad proposition, bad policy, and bad for the people of Hawaii is that it could jeopardize our bond rating, which already, Speaker, has been downgraded. We borrow money, we have a rating, we have no difficulty in buying our bonds and at favorable interest. But if we enter into something such as a state bank that buys toxic mortgages, our bond rating is going to go down. And for the sake of those who have been following the Bank of North Dakota, get a load of this. Standard & Poor's raised the Bank of North Dakota credit rating in its latest review of the bank's release statement of December 6, 2001. Its long-term credit rating is now raised to AA- from A+. Speaker, A+ is nothing. AA- is like stable. So when we tout this bank, which actually only puts $30 million into the Treasury every year, you know, this is not exactly Fort Knox. I was very shocked to know of this lack of stability, or let's say the lack of a AAA rating, et cetera, et cetera. I should also note that from its 1919 beginning and its purpose for farmers, for agricultural loans, people should know that right now they are so far out of that their investments now are primarily student loans. The biggest thing that they buy is student loans at 37% of their portfolio. Commercial loans are 36% of the Bank of North Dakota. Residential loans, that is real ones, not foreclosed loans, 17%. and agricultural loans 10%. So with that portfolio of total assets that are valued at $4 billion, they get 30 million in profit per year, which is the fourth reason. What money do we get out of this? We have now $4 billion that the state of Hawaii invests. $2 billion is probably in the Hawaii, Bank of Hawaii and the First Hawaiian Bank. We get about $16 million per year from them. Speaker, these have been almost 100 years old, and they got $4 billion of asset. In order to make that much money to put in the Treasury, we're going to have a lot of money to invest. Question, where do we get the money? Where do we get the money to start the Bank of Hawaii? Council of Revenues is coming up in a matter of hours. Gas prices are going up. Tourism may go down. Who knows what's going to come up in November election? Who knows what's going to go on with Israel and Iran? We got a lot of uncertainties, but yet this bill says we're going to do the bank, not like the study that says we should study the bank. The fifth reason, not only we don't have the money, we don't have the time. Speaker, if we're doing this for actually a moneymaker to help as our
Representative
good friend,
Pine, do you want to yield your time, please?
I yield my time.
as our
Thank
good
you.
friend,
Please proceed.
thank you, thank you, thank you. From Manoa noted, you know, we got to have money to pay for schools, and we got to do all these other things. Well, how long are we going to wait, and how much money are we going to risk to do that? Have we got the time? Remember, the Bank of North Dakota is about 100 years old, and it gets 30 million in its coffers for $4 billion worth of assets. That's not a huge return, not a huge return at all. Number 6, the governance model, Speaker. How you run an operation is important, and who runs the operation. If we mimic this governance model from the Bank of North Dakota, the governor is the chairman of the board, and let's face it, our governor is very smart. He has a PhD. But it's not in economics, it's not an MBA, but it puts him at the head of the pack, the head of the board. It also has a 7-member advisory board, and in Hawaii's case, members of the AFL-CIO would be board members. Would these members be knowledgeable also? Maybe, maybe not. But the problem is, Mr. Speaker, that when we look at the role of the legislature in North Dakota, in our legislature, I noticed in doing my research there were a dozen pieces of legislation that the North Dakota legislature passed to fund money. For example, $3.3 million went to the Lieutenant Governor's office for a computer project. There was also a loan to the Department of Human Services for operational purposes. Mr. Speaker, this is supposed to be a bank, and it's already funding government operations or loaning money back and forth, voted on people such as us who are elected. Do we want political leaders doing financial leadership for the state of Hawaii with the assets that would be pledged for doing this? Lastly, Mr. Speaker, this state bank would blur the lines between the private and the public sector. Hawaii is already the largest public sector in the nation. 30% of our labor force works for federal, state, or city and county individuals. Corporations are only 70% of the labor force. 30% are government workers. We have 2 of the best banks in the nation. One was #1 last year and #2 this year. That's Bank of Hawaii. We don't need another bank. There's not a shortage of money that we need to borrow. There's not a lack of funds that we have. We have good interest rates. The reason for getting into this is a puzzle, except when I speak on the 3rd Bank of Hawaii, State Bank of Hawaii, we may uncover even more reasons why this is a bad idea, bad policy, and not good for the people of the state of Hawaii. Thank you.